If you've passively received interest, dividend, rent, royalty, or any other type of investment income during the tax year, you might be subject to the net investment income tax. The net investment income tax is a tax in addition to capital gains tax, ordinary income tax, and even foreign tax that you've already paid on your investment income. If you want to learn how those types of investment income are originally taxed, check out the link below. Some of you might be happy to hear that this additional tax only applies to taxpayers who have modified adjusted gross income over the thresholds listed here. Now, as you can see, if you're a single taxpayer and you don't yet make six figures, then this additional tax most likely will not apply to you. If you're like, what the heck is my modified adjusted gross income? Well, here's the IRS definition here. Pretty much, if you don't have any foreign income, generally your modified adjusted gross income, which we call MAGI for short, is going to be the same as your adjusted gross income, which we call AGI for short. And if you're like, what the heck is my AGI? Well, go to Form 1040, scroll down until you get to line 11, and that will show you your adjusted gross income. And if you look at the lines above that, you'll see what goes in and what goes out to get to your AGI. I hope that helps. Since we're already looking at the 1040, let's go to 1040 Schedule 2. And now we're going to go to Part 2, line 12, and that's where you'll see where we report the net investment income tax. You'll see there it says attach Form 8960, and that's really where we're going to get all the details. So let's go to Form 8960. Here on Form 8960 Part 1, you can see a list of all the types of investment income that are included in the tax calculation. You'll see interest income, you see ordinary dividends, you'll see other types of income. On Part 2, you'll see investment expenses that you can deduct against your gross investment income. All of that to get to Part 3, line 12, where you get to your net investment income. Now let's get into the juicy part. What is the net investment income tax? Well, it's a 3.8% tax on either the difference between your MAGI and the MAGI thresholds or the net investment income. Let's take a look at Form 8960 again. Let's look at lines 13 through 15. And so you can see if your MAGI is $250,000 and your threshold as a single taxpayer is $200,000, the difference there is $50,000, right? You'll be taxed on either that $50,000 or your net investment income, whichever is smaller. Make sense? And before we go into our final points, I wanted to say that we're talking about federal tax only. State income tax varies. Some states have a tax, some states don't. So right now we're just talking federal. And as I mentioned earlier, this type of tax only applies to passive investment income. If you're a day trader, real estate professional, active partner in a partnership, or have another investment professional activity that qualifies for a trader business under the specific rules for net investment income tax, then different tax laws apply to you. In this video, we only talked about how the net investment income tax applies to individual taxpayers, but know that this tax also applies to estates and trusts. Net investment income tax is also subject to estimated tax provisions, so you'll want to make sure you're paying in estimated tax payments if you have significant net investment income. If you want to know more, the IRS has a great Q&A on net investment income. I'll post a link below, and you can also take a look at the Form 8960 instructions. I know it sounds boring, but they're pretty straightforward and a little bit helpful. All right, this is the Little CPA, not your Little CPA, so make sure you contact your own legal, business, investment, accounting professional for specific advice. This was just for informational purposes only. Thank you for watching. Bye.